Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Thursday we got the confirmation of the engulfing Japanese candlestick from the break of 69.65 to the Australian dollar, and therefore has now initiated further expectations to a rally that looks to a target of 70.35, or maybe up towards where I've outlined here, so around 70.70. In light of the pattern though, I feel that overall we are relatively bullish. So as long as we continue to hold above 68, 60, 70, then I feel that any pullback should find initial demand from 69.25. And as I mentioned, overall, view the upside potential to eventually be completed around that 70.35, 70 area. Looking at the euro, the market has been somewhat subdued or flat over the last 2.5 trading days. Nevertheless, as the market now looks towards the US Federal Reserve Chairman Jerome Powell's speech at the two-day Jackson Hole Symposium in Wyoming, the Friday morning, we'll expect to see Jerome Powell talk a little bit more on interest rates, as investors will be looking for clues on whether the Fed chairman may signal another 75 basis point interest rate hike or a 50 basis point interest rate hike when we sit at his next policy meeting on September 21st. However, before we get to that conclusion, there is still much data to be assessed. That is, from September 2nd, we get the non-farm payrolls number, that is the US jobs report, and then on the 13th of September, we get the release of the US inflationary data, that is the CPI. And along with that, if we do get a smaller Fed rate hike, this may produce a lot of headwinds for the greenback, as it could indicate that the central bank has acknowledged that they are willing to show at least some pace to their policy rate increase in slowing. That is, so therefore we could see a little bit more momentum come out into the euro. My call still holds bullish, as the dollar index, which measures the greenback strength against a basket of 6 major currencies, holds above around 108.40. And still beneath the key level of 109. As long as we don't break above there, and I feel right across the board, we should see some strength against the weaker US dollar. That would mean that the euro could head towards 100.55.75 as a potential target, with the downtrend seen slightly higher around that 102 figure 35 area. For dollar yen, I still feel the market is somewhat bearish, as the rejection from that 137.5 looks towards 135.30 as a potential target, with declining indicators does support this bias to the negative case, and therefore see if the market can potentially reach its objective before profit taking emerges. Looking at sterling, I feel that we are still at this point waiting for the engulfing candle that was rejected around that 117.2060 area. And in light of the current pattern here, we should eventually see a move to confirm this signal from a break of 118.70. If so, that would look towards 119.6080 as initial objective, and then reassess. Gold still shines as the market still looks towards that top side target of 1,762. And if we see a break there, we'll give further scope towards 70 to around 80 as a potential target. If we do see a rejection, like previously seen from 1,762, then this could actually give somewhat of a dent to the bullish case after its 3-day trek, and furthermore look down towards that recent rejection area around 1,732 and reassess. What would seem the market is somewhat a little bit apprehensive in taking the challenge towards that $96 a barrel for oil, and we got a very weak engulfing candle. I'm not at this point going to give up the top side challenge around that 96, because technically we're still holding somewhat bullish and therefore could see another re-challenge. Let's see if the market can take it there. If not, a close under $92 a barrel would reinstate the downside back to $86. Well, that wraps it for the week. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.